Welcome to Supernatural Stocks on Moneyweb with your host, the Finance Ghost. This is your weekly fix of equity analysis designed for stock pickers. Whether local or international, you can expect a mix of news and my ideas about what I'm seeing in the markets. New Zealand, Singapore, Hong Kong, these are the top 3 countries on the Ease of Doing Business Index produced by the World Bank. South Africa sits at number 84 on the list. For context, Mexico is at 60, Rwanda is at 38th. Russia, incredibly, 28th. Does this sound right to you? It certainly tells us something about the timing of the last index, which, by the way, was back in 2020, when Russia was not a global pariah. Zambia is at 85th, just one spot below us. Really? Among the sub-Saharan African names, Mauritius is top-ranked. They sit at number 13 in the world. And yet, if you speak to anyone in a corporate advisory role who has any amount of structuring experience, they will tell you that whilst the island is certainly useful in many circumstances, raising capital there is not one of them. Are there businesses that you actually want to buy that are operating in Mauritius? No, probably not. The Ease of Doing Business score there is practically a lead generation tool rather than the outcome of what corporate life is really like on the island. Clearly, we need to dig deeper. And yes, I will mention a couple of stocks here near the end. After all, this is supernatural stocks, not supernatural macroeconomics. But sometimes I do feel the need to opine on the state of what's really going on in our economy. Now, the devil is always in the details, and the Ease of Doing Business Index has a number of categories. The first one is starting a business. They certainly do start right at the beginning. Now, this talks directly to the procedure, the time, and the cost of getting a PTY Limited off the ground. Indeed, we are not great here. In fact, we were ranked 139th on this metric, so we are a lot worse at the admin than we need to be. Can government do more about this? Of course they can. Will they? Honestly, who knows? If the process of doing a beneficial ownership registration on the CIPC website is anything to go by, then probably not. This feels like something our government should be held accountable for. Next up in the index is construction permits. There we rank 98th, so also not great. Again, bureaucracy gets in the way, so do general departmental inefficiencies and of course corruption. This is all the stuff that led to where we are today with the GNU and a shift in how South Africans are willing to view their government. Getting electricity is the next category, mildly hilariously, and they use City Power Johannesburg as the case study, so it only gets worse. And look, you won't be surprised to learn that we are 114th on the list. In fact, you might be surprised because you might have expected us to be lower. It is somehow worse to just open a business in South Africa in relative terms than it is to get electricity in Johannesburg. This, of course, doesn't have any metrics for is there any electricity, because we wouldn't have scored very well on that back in 2020. Next up is registering property, where we rank 108th. That's another poor showing. Our systems as a country just do not help our international image at all. So let's move on. The next one is getting credit. Now, here we should start to shine, right? But alas, we are only 80th. Now, this is where I start to really question how useful this index actually is. Because in my mind, getting credit in the context of ease of doing business means as a company, are you able to raise debt? Are you able to borrow money? The JSE has a vibrant debt capital market. It really is world class. We have corporates that are borrowing at tight spreads all the time. Sure, our banks are not great at lending to SMEs, but that's the case in many countries. And it's also why you've seen a proliferation of fintechs. So how are we only 80th on this metric? If you dig into the way they go and do it, you'll see the credit bureau information on adults in the country is one of the major factors that they use. Now, I'm sorry, but is this the ease of doing business index or the ease of borrowing money so I can buy a new car index? Even the legal metrics that they look at are mainly related to lending to individuals. So the way they consider this metric is applicable only to companies that actually want to lend money, not those that want to borrow. Strike one for me. Next up, protecting minority investors. Now, our Companies Act is world class, and so is the JSE, and so are most of our regulators, certainly those in financial markets. We rank 13th, which is solid. I accept that graciously on behalf of my people, on behalf of the ecosystem of financial professionals in this country, and we move on. Next up, paying taxes. We rank 54th. That's probably a somewhat kind view of SARS back in 2020, but they have gotten better since then. I can confirm as a small business owner, there's still room for improvement, but things have definitely become smoother. Then we get to trading across borders. This is the metric that we are worst at. And I'm not surprised. We sit in a lowly 145th, and I suspect things are worse now than they were then. Keep in mind that with this being our worst metric, that means it's worse than the getting electricity metric. And we don't even have electricity all the time until the last sort of 12 months or so. So just a complete failure of government here. Our ports are poor, they are slow, they are inefficient, they are desperate for improvement. Any local retailer or supply chain company will tell you this. It's unacceptable and it should be a major focus area of the GNU. We now get to a category called enforcing contracts. Now they measure this based on the Johannesburg Magistrates Court. So again, in a world where you can put your best foot forward, we definitely do not do that. This means that they are looking at relatively minor court cases because it's a magistrates court, and shock and horror, our performance here is very poor. I suspect it has worsened since the last index. We ranked 102nd. It's desperate times for court dates from what I've last heard, so there's another failing of our government. No excuses there, it's nonsense. We then get to the final metric that they use in this index, resolving insolvency. Now this uses metrics like recovery rates and how long the whole process takes. We ranked 68th. Fair enough, our financial systems are pretty good. I don't think resolving insolvency is really right up there on the ease of doing business. It's not kind of your base case going into a company, but fair enough, we did quite well there. But what are they not measuring? I appreciate that this is called the ease of doing business index, not the will you make money here index. But at the end of the day, you're not going to do business if you can't make money. It can be extremely easy to set up a PTY Limited and buy a property and go to court. But why do you care if there are no opportunities after that? To look at this properly, you would then need to overlay this index with the underlying economic growth. And sadly, South Africa is not going to score terribly highly on that either. But I do think that there are two ways to improve this index that don't talk to growth, but do at least talk to the level of underlying economic activity and related opportunities. The first change I would make, or the first addition certainly, would be something around the ease of raising equity capital. This would look at the depths of capital pools on the JSE, for example, and even in supporting infrastructure like the private equity market. I think South Africa would score pretty well here. We even have a half-decent venture capital environment, let alone the large and sophisticated private equity and institutional investment base that we enjoy in this country. Believe me, Mauritius may be higher up than us in terms of doing business, much higher in fact, but Fairvest's capital raise in the past week of 400 million rand at a practically immaterial discount to their volume-weighted average price would be a pipe dream of note on the island. In fact, I doubt strongly that they could even do 40 million, let alone 400 million. And linked to this suggestion, can they please change the getting credit section to be from the perspective of a business, not an individual? Then the second category that I think needs to go in here is just the number of registered and operating companies. Now, I don't know how South Africa would rank here, but measuring the number of operating companies per capita could be quite fun. What I'm getting at here is that doing business is made easier by having access to other businesses around you. This talks to the broader ecosystem of economic activity and how formal it all is. I specifically mentioned operating companies because there is a very big difference in practice between the postbox companies that you get in these island economies like Mauritius, where you go to an office building and there's just one room and on the door is the name of whichever business happens to be represented there. And then operating companies like you have in South Africa, where there's actual people doing stuff, employees, not just post boxes. It's not just a Mauritius thing, by the way. I'm not picking on Mauritius. I'm just pointing out that we often have to suffer through people saying, oh, look at the score in Mauritius versus South Africa. Mauritius is a better place to do business. No, Mauritius just does a better job on this index of ticking the right boxes. And this brings me neatly to, I think, the most important category, which at least is measured, and that is protecting minority investors. Now, clearly it is annoying when you have to deal with poor governmental departments and processes that are desperately in need of a kick up the you-know-what. Our ports alone are a shocking mess. It has to get sorted out. Nobody's denying this. But as an investor, which most of you listening to this podcast would be, what do you care about more? Getting the short end of the deal as a minority shareholder in a listed company, or waiting a little bit longer at the deeds office when you sell a house, twice in your life probably? Would you like to invest in corporates that can raise money as and when they need to? Or are you more bothered by Sipsy's little irritations because it took you a few days longer than elsewhere in the world to register a new company? I'm not making excuses for South Africa's government, nor am I papering over the cracks here. But I am going to use African Rainbow Capital as a very good example. They want to take the thing private, as they've been warning for a while, but they're doing it, or they would like to do it, at a discount to the newly published net asset value per share. Now, in South Africa, appraisal rights would be practically guaranteed here. I can't imagine what their defense would be of how the fair value is somehow not the NAV per share. And this would force African Rainbow Capital to think hard about this decision because they know that activist shareholders would go out there, put a whole group of people together in all likelihood, go to court and get paid out at NAV. But here's the thing, African Rainbow Capital, the listed company, is not a South African domiciled company. It's registered in Mauritius, the bastion of ease of doing business. I've looked at the Mauritian Companies Act and there seem to be some provisions that look a little bit like appraisal rights in South Africa, but it's definitely not copy-paste. And I don't think it's the tried and tested path that South African investors are familiar with lots of case law, for example, in the South African courts. I'm not sure they have that in Mauritius. Maybe they do, but I would be surprised. It's a different legal system. It's a different Companies Act. And therefore, it's a much riskier thing for South African shareholders to say, okay, we'll go down this road. We'll try and go this route in the Mauritian courts to get paid out at NAV. And this creates an opportunity for this cheeky offer at a discount to NAV. How will this play out? We don't know yet. But what I do know is that whilst our government should be doing everything possible to improve our global perception, I also just don't think this index is realistic. How will this situation with African Rainbow Capital play out? Well, we don't know yet. But what I do know is that whilst our government should be doing everything possible to improve our global perception and getting the basics right, I also don't think this index is realistic. It's far too much of a tick box exercise, and this makes it easy for small island economies to do really well through just getting the administrative stuff right. Now, kudos to them, truly. But let's not pretend that more people are making money on the ground in places like Mauritius or Rwanda versus South Africa. And in fact, this entire index does stink, I've got to tell you, because if you go onto the website that deals with it, you'll find that the World Bank released a statement in 2021 regarding data irregularities that were uncovered the last time this survey or this index was done. You noted, right, that it was 2020 was the last time they did one. Why haven't we seen another one? Well, that's because a subsequent investigation revealed a number of shortcomings in how the report gets put together and how some countries have even tried to influence the outcome. What a big surprise. In summary, I don't think this index is worth the paper that it is written on. I would, however, encourage South Africans to continue making their voices heard about government's shortcomings. We don't need an index to see them. We just need to look around us. We just need to read company results on the JSE. We also need to not forget to celebrate the wins, like the exceptional financial ecosystem we have in South Africa that allows the likes of Fairvest to raise 400 million rand on the market in the time that it takes you to finish your breakfast. There's no such thing as an opportunity without risk, and these are merely my opinions on the stocks covered herein. Make sure that you do your own research, form your own views on the market when doing anything in your portfolio. Nothing in supernatural stocks should be taken as advice.